All right, so in the second segment now, Alex, we're going to be talking about small businesses, startups, and you as a venture capitalist evaluating these businesses. I talked about this chart with you offline, the small business applications from the U.S. Census Bureau, huge spike in 2020. What are these businesses that people are starting in 2020? Do you have any insights?
Yeah, we're seeing a lot of small business activity around either pivoting towards or just starting anew in ways of addressing some of the new realities of living in the pandemic. And so if you're lucky enough to have an opportunity to either get involved in one of these startups or invest in one, the question that we ask ourselves at O'Leary Ventures is, which of these companies are betting on the types of trends that will outlive the pandemic? Right. So on one side of the spectrum, you have things like, okay, we're starting a company that's making beautiful couture-like masks, let's just say, face masks. Well, okay. And then on the other side of the curve, you might have something like, well, companies that are benefiting from more people working at home. Well, I think it doesn't take that much to see how the second of those is probably a more stable trend than the first, right? I mean, will we all continue wearing masks every day post widespread vaccine? I mean, there are those who say yes, maybe, but is that more than 50% likely? I don't think so. On the other hand, will a lot of people continue working from home at least some of the time? Yeah. So that's what we're seeing.
You mentioned earlier in the earlier part of the interview that you think that hospitality, entertainment, cruise ships, those kinds of sectors might outperform. So if I were an entrepreneur, I had a startup idea for, let's say, anything within those sectors, right? Let's say, I don't know, an app or some sort of hospitality business. Would you give more preference to business ideas within that sphere right now if you were to evaluate capital fundraising?
That's interesting. In the private equity venture capital space, you don't always have the benefit of, looking at it's not like in the public markets where you open up your terminal and there are 10,000 stocks to choose from. Typically, in a given week, we might get pitched by, maybe 3 or 5 companies, and those are the ones you kind of look at one at a time. So it's a little bit different, but. I think I would give, certainly I would give a second look to something in one of those sectors. Yeah.
So Alex, I like to get a better sense of what you've been investing in terms of private placements since the pandemic. You can extend this to the last 2 years too, but particularly since the pandemic broke out, what have venture capitalists been looking at?
Sure. I think, in the last couple of years, a lot of private equity venture capitalists have been really in touch with their existing portfolios and helping those companies pivot, navigate. Right, we saw memos go out from a lot of the top VC funds at the beginning of the pandemic, telling their companies, conserve cash, don't count on another equity raise anytime soon. Right, retrench, trim costs where you can. Right, and I think we're very much in that camp in some ways, with one important difference, which is that we've actually done quite a bit of follow-on financing in the last year since the pandemic began. A lot of our businesses, we've been kind of going through the portfolio and seeing, okay, which of these companies have managed that pivot most effectively where necessary. By the way, some didn't even have to pivot, right? There are some that just by sheer chance happened to be in a space that, benefited from the pandemic. And then there are others that suffered just straight up, either went under or are sort of on the knife edge. But then there's a kind of a group in the middle where they would have been in that second camp had they not immediately jumped on making dramatic changes in their strategy and positioning, etc. And it's really that middle camp that we've been trying to support, and in many cases writing them checks. Because we see opportunity for them to actually come out stronger.
Yeah, let's talk specifically about tech startups, because that's a lot of younger people are really interested. I had a friend working in private equity actually, and then he switched to the tech side. And he told me that if if a tech startup were to approach a venture capitalist like yourself and they were to show actually a profit and a positive retained earnings, that's actually a red flag, because it shows they're not putting all their cash retained into growth. So you want zero cash, you want zero earnings, you want zero profit in the beginning. When he told me that, I said to him, like, I don't understand this.
Yeah, it's funny, but he's not wrong, because I'm assuming he's talking about the very earliest part of a startup, right?
Yeah, like seed stages. Yeah.
Yeah. So just think about some transformative technology. Imagine that you invented. I don't know, a new pair of shoes that can make you fly or something, right? Well, chances are you're not going to be able to make that first pair of shoes profitably right at the beginning, right? If you can, that probably means that everyone else can too, in which case you're not going to be a company with a big competitive advantage over time, right? So in a funny way, he's right. But at the same time, I think there's a lot of misunderstanding here around the relevance of price to earnings ratios across different sectors, right? Some people say that, in the tech sector, price earnings doesn't even matter. Well, that's not quite true. Now, we do use proxies or other metrics oftentimes, right? Sales growth, being one of the top ones, and a few other metrics as well, depending on which subset of the tech industry. But for me, and certainly for our organization, a lot of those are sort of quick and dirty proxies for where do we think, or what range do we think price earnings are going to be in, soonish, let's say 4 or 5 years out. And so price earnings still matters. It's not, you just recognize that the company's not there yet.
Yeah.
And
especially if you're talking about a company like, let's say Tesla didn't have positive earnings. How does that even apply?
Sure. And Tesla's it's not a stock that I don't have a specific opinion on the price of that particular stock. But I would imagine that that the market believes that in a certain amount of time, their earnings are going to be a reasonable multiple their price will be a reasonable multiple of their earnings. Now, I'm sort of vaguely aware that Tesla has a bunch of other markets that they're not in yet, right? Like I think HVAC and sort of self-driving fleet, et cetera. But I'm not going to sit here and say that I've done the numbers.
Let me ask you this. The tech sector overall, is it overvalued? Pretty much everyone
Absolutely
I've talked to, I'll just give you a disclaimer. No. Pretty much everyone I've talked to, I've said yes. I think you're the first person to say no.
I just don't agree. I just don't see it that way.
All right.
I guess it's hard to talk about the tech sector as a whole because it's made up of a bunch of different specific companies, but a lot of the trends that were accelerating the sort of concentration of economic activity into the hands of technology type companies have been accelerated in the last year. Right? You look at automation, right, and robotics. You look at artificial intelligence. You look at just software replacing human beings. At every turn, and unless you think that's going to slow down and that we're going to go back to kind of a horse and buggy type of world, I don't see that trend being wrong or reversing, and I don't see. You'd have to show me a specific stock and to tell me that here's why I think this one is overvalued, but I don't see it sector wide.
So this is in 2001 all over again, what we're seeing in the NASDAQ in terms of the tech bubble, 2001.
No, I don't think so, because you remember in 2001, all you had to do was put the word .com at the end of your company name, right? And it would shoot up. Now I know I'm just, as I say that, I'm remembering that the other day, Elon Musk tweeted
Yeah.
that he recommends the company Signal.
Yeah.
And, within a few hours, a completely unrelated company also called Signal shot up. So
yeah, my friends were considering shorting that, but they didn't because they were concerned about liquidity. But anyway, continue.
that's funny, which also incidentally highlights one of the troubles of a short strategy, right? You have to have plenty of liquidity. But barring examples like that, overall. By the way, has that stock come back down? I would imagine yes. It must have.
Yes,
right?
it has. Yes, it has.
Right. Okay, so I think that kind of proves it, right? I mean, if that stock were still up days later, that might be cause for concern that we're in a 2001 type .com situation. But I think you really can't compare this year. Just look at Amazon this year versus Amazon in 2001. Right, in 2001, without hindsight bias, okay, pretend that you got to pretend like all you know is what was known until that point, right? Where here's a company that came out of nowhere, they're selling books. Who wants to buy books online? Why would you do that? Why would you pay for shipping? Why would you wait 3 days instead of going to the local bookshop? Do you even trust paying online? What if they steal your credit card? All those things, right? Are the modems even fast enough for this? People don't have cell phones yet, right? Versus today, I mean, is anyone going to sit here and say, "Oh, Amazon's never going to be profitable"? They're already profitable. The question is only how much more profitable are they going to get, right?
I guess if you come up with what's the next transformative technology? What do you think is going to hit the market that's going to make every single VC on the street say, "Hey, here's my money, take it. I'm not even going to look at your financials." Do you see that happening again?
Yeah. I mean, I wouldn't just say not in the future. It's already happening. I would say right now that's already the case with artificial intelligence.
Okay.
Right? And all you have to do is imagine, pick your sector, and you can start to see how artificial intelligence can absolutely transform it. My favorite is healthcare. You just think about the potential that in the future, and not the distant future, the near-term future, you'll be able to go see a registered nurse. Right, and she'll have, or she or he will have a artificial intelligence device of some sort, and that device will do a significantly better, more accurate job diagnosing you than a human being doctor can do today. I mean, just think about what that is going to do, for that entire industry. Really, think about the effect of that on the insurance industry. On health and wellness, on jobs, it's the effect is massive, and that's just off the top of my head.
Is that a double-edged sword, Alex? Is that going to lay off a lot of people?
Yeah.
Okay. Well, what's going to happen to society then if my job, let's say a robot starts asking you questions? I'm going to be out of a job, right? Healthcare workers, they're going to be replaced by robots. Like what's happening? What's massive unemployment? Is that the result, or are we just going to see a shift in skill sets?
Well, it depends how far out you're looking, right? I think in the sort of medium term, no, I don't see massive unemployment. I see, like you said, shift in skill sets, okay. Right? Because it's going to be a while before there's nothing left for us to do. If that day ever comes, so I wouldn't worry about it in the near term. In the longer term, I would. There's two ways of looking at it, right? I mean, unemployment. It's kind of got a sad tone to it when you phrase it that way. I mean, imagine a day in 100 years, okay, where we have the luxury of the same kind of GDP expectations that we would have had, because it's not that the robots they're not idle, they're doing the work. So we have the same economic output as before, theoretically.
Yeah.
But am I going to work today? Oh, I don't know. Do I feel like it? I mean, that doesn't sound bad. That sounds great. I can't wait to be replaced by a robot as long as I can keep getting, a salary.
Yeah.
Which, I guess but that's, now we're getting into kind of policy and how do we distribute, but there's got to be some way I can't imagine that the potential benefit is not worth sitting down and figuring out.
Andrew Yang, the presidential candidate, has argued for exactly that. He said that automation is going to come and we need universal basic income because people are going to be replaced by robots.
Yeah, and that is one way to do it. That is certainly worth looking at. Personally, I'm a fan of pilot projects and gathering data when it comes to universal basic income, because I think there are some really good arguments for it, and then there are also some interesting arguments against it. But what's interesting is that it turns on things that we can verify objectively rather than philosophical disagreement, right? So there are those who say, well, it'll just make people work less. And then there are those who say, no, it'll make people work more, right? Mm-hmm. Because right now, if you're collecting welfare, you have a disincentive to go and work that incremental 1 hour, right? You have to work so much that it'll overcome, you have to make 20% more than you would have gotten on welfare or unemployment for it to be worth your while. Whereas with UBI, if you go out and get a job, you still get that check regardless, right?
Yeah.
So which of those is true? Well, I don't know. Why don't we try it and test it out and see? And the interesting thing is that there are places around the world that are running pilot projects over the last few years. Finland, I think, was one of them. And now with these stimulus checks, we may have accidentally conducted the biggest pilot project of all time. So It'll be interesting to see once things have sort of settled down. I look forward to reading how people parse the numbers and see what was the result of that effort. There are other ways to do it other than UBI, by the way. That's not the only one.
Yeah, we'll follow up on that as the data comes out. Final question. I know I've kept you long enough, Alex, but it's been an interesting discussion. Let's say I were an entrepreneur and I came to you with a pitch. I think some business startup owners are, really looking forward to getting a VC's insight on what kind of due diligence you're doing and what kind of mistakes they should be avoiding.
Yeah,
just in terms of valuations, just deciding how much money you should be investing. Just from the valuation perspective, how would you do that?
Sure. Well, I think it comes back to that idea of we are conservative when it comes to valuations. I mean, there's no secret there. If you've ever seen an episode of Shark Tank, you'll know that Kevin O'Leary, who's the chairman of our organization, it tends to take a pretty sort of orthodox, if you like, view of how much earnings yield, if you like, will there be on a dollar invested. Now that doesn't mean that you need that earnings yield tomorrow, right? It could be in a few years, depending. But for us to get excited, we need to see a path towards that outcome in a reasonable amount of time, depending on where you're at so far. It's not that we aren't patient, but the more patient you need us to be, the more compelling that upside has to be. So if I were advising somebody on how to pitch, right, it also depends on when, right? So if it's really early and it's just at the idea stage, I would actually change the conversation to should you or should you not pitch at all just yet, right? Because it's never going to be more expensive to raise money than at the very, very beginning. Right?
I know Kevin's a fan of having businesses solve problems. If a business doesn't solve a problem, I think I'm paraphrasing what he said, then it shouldn't really exist. Right. Yeah. Okay.
Yes. Yeah. That's exactly right. And I was sort of focused in my answer there on valuation.
What if there are multiple businesses trying to solve that problem? How do you discern then which business to invest in?
Are we assuming that we have access to all of them or not?
Yeah, let's say multiple businesses, let's say 3 or 4 come in, they all want to, they're all AI companies that want to, they're all the companies that promise to, enhance your workflow, let's say, on a big data set. What do you do then?
That's a tough one, but I think in that case, we would look at the strength of the team. And, sometimes people, Mark Cuban likes to use the word wantrepreneur, which, by the way, is also not as derogatory as it sounds. Okay. Every entrepreneur was once a wantrepreneur, right? So, people tend to get discouraged, right, when they hear that somebody like me or like Kevin would focus on, who's on the team, because they think, well, what do I have? I'm just a guy in, Kansas, or I'm just a gal in Nebraska or something. What do I bring? But that don't forget, okay, your team slide in your slide deck, the one that has your face and those of your coworkers, that slide is only finished when you say it's finished, right? If you think that an investor is not going to look at that slide and think, oh yeah, this is definitely the Venn diagram between these people's skills and what's needed for this business to be a rocket ship is almost a perfect overlap. Go find those people. Don't limit yourself, right? Make them your co-founders, and please do not limit yourself to who happens to have been in the room with you when you came up with your idea, right? Go and find somebody you've never met before who is objectively the best possible person for each role. And before you know it, you are the rockstar team. And by the way, you don't have to give them 50% or 33% if it's 3 people. Okay, if it's your idea, okay, that's just the last point, but it's very important. When people think co-founder, okay, when I first co-founded a company out of law school, okay, which I was the co-founder. I was employee number 1 other than the CEO, or I guess number 2 if he was number 1. Okay, and I owned 0.6% was what I got. And it was great. I mean, it was more than enough for me to start out as an angel investor. I mean, by the end, right? It was worth plenty. So you don't have to think of it as, I don't want to bring in co-founders because I have to dilute myself like crazy. No, you don't.
Okay. Let's follow up another time and talk specifically about startups. I think we'll have an interesting discussion about that. But anyway, Alex, I want to thank you so much for your time today. We've ran through a lot of topics. Thank you very much.
Thank you, David. It was a pleasure.
Thank you for watching Kitco News. I'm David Lin.